Back then, hedge fund rules prevented you from talking about your returns publicly. And I have like a big mouth and like I couldn't talk about it publicly and I was just getting more and more frustrated. I went on this TV show called Wall Street Warriors where I was drunk in every episode and it became like a hit. And I couldn't talk about my performance, but you knew that I turned a few thousand into a few million. And I was trying to get my hedge fund bigger. I invested basically a third of it into this one company, Cygnus E-Transactions. This is the problem with having no mentor, no risk management,
You went all in, almost.
Not all in, but a third of your hedge fund. I had like a $3 million fund, put basically $1 million in, lost it all.
Oh no.
So killed my hedge fund returns right as the TV show was like booming. It was all messed up. Like, and I couldn't even talk about it publicly. I couldn't talk about my wins publicly. I couldn't talk about my losses publicly. But I basically fell in love with the technology and had $1 million loss. So
yeah. So I think the way you would trade a hedge fund money will be different than how you would trade your own money, right? How did you manage it differently? And what are some of the drastic difference in terms of difficulty?
Yeah, so there was no difference for me because I was half my hedge fund. So the only reason why I started the hedge fund was just to diversify, and I had a lot of friends and family who wanted to like, trade, and they couldn't do it themselves. They didn't have time, like it's very time consuming. So I was like, okay, let me just, manage other people's money. It was just an extension of my own strategy. But again, the problem with me as a hedge fund manager is I was trying to grow it bigger. At that point, I didn't understand the limitations of my strategy. I thought like I could run like $1 billion fund. I didn't understand scalability. So I invested a third of it into this technology, which I thought was huge. I was right about printed home ticketing. It became huge. Wrong about the company. But it really taught me from my wins and my losses, like what I knew, what I didn't know. Like I can always make like $1,000 or $2,000 here or there on these little trades, whether it's .com plays or pump and dump, shorting them, and now trading short squeezes. But I have problems scaling up because I never learned structure. So all my wins, all my losses led me to becoming a teacher because I wanted other people to have like an easier time than me.
Yeah, I think especially since you mainly focus on penny stocks, do you think that's part of the restriction that prevented you from scaling up? A lot of traders I know, once they can start with penny stocks, small caps, but eventually if they want to really grow like millions of dollars of accounts, they can no longer trade those small stocks. They have to go to large caps or trade options.
I've tried other strategies. I'm just not very good at it. And I think it's due to my own, failings with a lack of like structure in my education. I was too successful, frankly, and that like hurt me because now I'm like, I want that success again. I want that 90 to 95% win rate. And you can't get a 90 to 95% win rate with more scalable strategies. You need to, monitor your risk, prune your position size, do all the things that I hate doing. So with penny stocks, it's like limited me, but I think that, part of the reason why I still do it is because I love it. And I think that everyone should start with penny stocks, especially if you're a newbie trader. If you want to, blossom and go into other strategies, that's fantastic. I'm like, I kind of think of myself as like this vampire, did you ever see Interview with a Vampire?
Yeah.
Do you remember that? Kirsten Dunst is this child. She can never grow up.
Yeah.
And like, that's me. I'm like this child trader. I can never really grow up out of penny stocks. So I've accepted my fate. And now I teach it. But like, I don't tell any of my students, like, you're going to become a billionaire. Like I say, like, you can make a few million, like me and now, 30 of my top students have, but there's limitations with penny stocks. So it's the gift and the curse. It's good that penny stocks, I think, are easier. They're a good place to learn, but you can't make tens of millions or hundreds of millions very easily.
That's true. I think penny stocks is a good way for people to dip their toes in the stock market. And whether they stick with it or they eventually transition to other asset classes or bigger stocks, I think people have different preferences and they choose their own drug, if I may.
100%. And so I've been on CNBC a few times and they're always like, oh, you started with penny stocks, you're into other stuff now. And I'm like, nope, just penny stocks.
Yeah, you should stick with what you know.
Well, I also, because penny stocks are such like a manipulated like BS industry, you have all these Discord rooms with like fake bots and like, there's so much misinformation. So now even if I wanted to change industries, like I can't leave this niche because otherwise promoters would just like continue to rip off newbies like they always have. So I have to like kind of look out for my little niche. Now I've like grown an affinity to it. So I don't know. It's been a strange quarter of a century journey for me, but I love teaching, and that's made this much more meaningful for me. Like how many years have you been trading now?
8 years now.
Right?
Yeah.
The adrenaline rush kind of wears off. It's nice. Like I still love like making a profit and like getting like a fast spike. Like this morning I was in a play, I made like 25%. I was like, yeah, I felt the rush, but I love it now. Like when other students have like those light bulb moments, and that's made it more meaningful. So you have to like kind of really be introspective in your journey. It's not just about how much money you can make.
I remember when I first joined, I think I was in like penny stock silver or whatever. There were a couple of strategies that's like your core strategies that you taught, like the panic dip buy or the first red day short or whatever. I know you have a couple more. What are some of the strategies that you would still recommend newbies to trade today? Because obviously we talked about earlier, some strategies change, some worked well in 2020 and 2021, and this year things have changed. What do you think is a beginner-friendly strategy that a lot of newbies should learn this year?
Yeah, so I mean, I love morning panic dip buys, but as we were talking before, like there just haven't been that many morning panic dip buys.
Yeah.
The best morning panic dip buys are on plays that have been running for 3, 4, 5, 6, 7 days in a row. Then they drop 30, 40% in a few minutes, taking out stop losses. Then ideally with the promotion, the promoters bounce it because they don't want an investigation, or dip buyers come in and you get like these 10, 20, 30% bounces in a few minutes. We're just not seeing that right now.
Yeah.
There have been a few this year, but not very many. Shorting first red days, that was always my go-to strategy, shorting. It still works, but I personally don't short because I trade like a newbie, and I don't think newbies should be shorting because a lot of the shorts right now, the squeezes are insane. Before, when I first started shorting, stocks would go 2 to 6, 3 to 9, 4 to like 12 over like 3 or 4 days max.
Yeah.
Now you're getting like 4 to 20, 3 to 80, like 5 to 100, and you're just like, newbies can't control themselves. So now I think like a teacher, so I wouldn't short first red days. Even though they're profitable, a lot of my top students have made a lot of money shorting the first red days. It still works. Newbies is difficult because you just can't control yourself. So right now, for newbies, I think that you should actually be buying short squeezes. I always say thank you, short sellers. Thank you to all the shorts who sacrifice their time, their health, their wealth, and they participate in these squeezes.
Right, okay.
It's partially my fault. This is what's crazy because I've been successful as a teacher and I have so many millionaire students who do short sell. Now there's a whole bunch of wannabe short sellers. And there's a whole cottage industry. There's all these little brokers that have borrows on these shorts. And before, there were never really that many borrows. I had a music video called No Borrow, No Cry. Right?
I remember watching that on YouTube. Okay.
I just released the 13th anniversary updated edition, right? But now there's a lot of short shares out there. There's a lot of short sellers, and the squeezes are just crazy. So as a newbie, you can sometimes buy these terrible companies, but they spike the fastest. Like the most fundamentally flawed companies can spike the most. And that's confusing for people because people are like, no, I want to buy a blue chip company. But no, you can buy like the worst company and it squeezes because of too many shorts.
I think it's very interesting because when I first found out about you, that's when I think you had some lessons on short selling. But back then, it was so hard to get access to these, I think you call it like a high net worth broker or whatever. You need a certain amount of capital to be able to short. I didn't have that. So back then it was very difficult. And then when like things started opening back up for these like people with smaller accounts, I was able to short. And they got so popular that nowadays there's maybe a little bit more edge going long at least the first or the second green day, and then you short it after that.
It's crazy how patterns evolve. Like even going back to my 99 and 2000 strategy, buying the .coms or buying the OTC pumps and selling the next morning. At first I was buying at like 3:55 p.m., 3:50 p.m., selling the next morning 9:30, 9:35 a.m. And like, you could have more time. Then it had to get earlier and earlier. So by the end of the strategy, I was actually buying it at like 3 p.m., not even holding overnight, selling at 3:45 p.m. because the pattern sped up. So you have to kind of understand, like if too many people partake in a strategy, it dissolves and it flips. And so like that's what's happening with short selling. So like a lot of short sellers hate me right now because I'm always tweeting at them. I'm like, thank you for your sacrifice. Like I know that you're going to the doctor a lot. Your stress levels are off the charts. You're having like heart palpitations. It's scary to be a short seller. Even like some of my top students, they make a lot of money, but like, like HKD went crazy parabolic. I had students and non-students who lost 6, 7 figures on that.
Kyle was here yesterday and he did talk about his really painful HKD loss.
But he's up nearly $8 million or $5 million now. So it's like it's good and bad. If you're an experienced short seller, you can usually outlast the squeeze, or you at least have enough know-how to cut your losses. Newbies keep averaging up. They think they can outlast it, but they can't. They don't have the know-how. They don't have the experience.